Welcome to Market News. I am your host. Today is Saturday, July 11th, 2026. Here is what you need to know. The market closed mixed Friday. The Dow Jones actually climbed 1.14% to close at 52,900. But the S&P 500 slipped 0.8% and the Nasdaq Composite fell 0.8% to 25,832. The Nasdaq 100 took the biggest hit, down 1.61% to 29,329. That is a pretty rough session for big tech and growth stocks, and the volume tells the story too. The Nasdaq saw 9.5 billion in share volume, just as heavy as the S&P's session. And if you look at the signal engine, which scanned over 10,000 symbols yesterday, only 16 showed strong bullish momentum versus 34 bearish signals. 16 versus 34 out of tens of thousands of checked names. That is a heavily skewed setup, the kind you do not see every day. The signal engine flagged GDC, PAVs, ALIT, NU and QNCX as the top bullish movers, all saying strong momentum up. On the flip side, BFLX, Cello, KTTA, PU and RNWWW got called overbought or overextended. So the message from the technicals is clear. Stay cautious. And yet, the headlines are almost entirely about one thing: artificial intelligence. AI continues to dominate every corner of the market conversation. NVIDIA closed at $194.83, down 1.39% on huge volume of 142 million shares. But you could not scroll through the news feeds without seeing NVIDIA mentioned. It was in articles about beaten-down AI stocks worth buying or avoiding, about Supermicro Computer introducing a new DCBBS blueprint for high-performance computing, about five-star analysts sending warnings on AMD even, as Broadcom and AMD both got attention in the semiconductor space. There were pieces on Applied Optoelectronics positioning itself to capitalize on hyperscale AI networking demand through its expanding optical order backlog. Lumentum was also flagged as potentially benefiting from accelerating adoption of co-packaged optics. Even the story about two beaten-down stocks that supposedly still are not worth buying included NVIDIA on that list alongside T-Mobile and a couple biotech names. And there was another piece arguing that two beaten-down tech names still are not worth buying, with NVIDIA featured again. That tells you something about where we are in this cycle, and how deeply the AI narrative has penetrated every type of market analysis. Upcoming earnings are the next big event on traders' minds. Investors are watching closely ahead of prints from NVIDIA, Micron and Sandisk. All three were flagged near buy points going into these earnings, but the broader technical picture makes those reports feel like they could set the tone for the rest of the quarter. So the question on a lot of traders' minds is straightforward. Can the fundamentals behind these names overcome a very cautious technical environment? If the earnings come in strong, you expect at least a temporary shift in mood. But when the signal engine is this heavily tilted bearish, even good news has to work hard to convince position holders. Let us talk about the signal environment a bit more. We covered the 34-16 bearish-bullish ratio, but the top movers on the day tell an even more extreme picture. The gainers were almost entirely low-priced and micro-cap names that barely trade most days. BCPC surged 598% to close at $168.80 on nearly 200,000 shares traded. CLRO more than doubled, jumping 101% to $6.48 with nearly 89 million shares turning over. CWD roared 91% to $1.23 with a staggering 338 million shares changing hands. On the other end of the spectrum, TC plunged almost 39%, LTX fell 37.4% and LI dropped 35.8%. That kind of extreme dispersion, these stocks moving hundreds of percent or losing a third in a single session, it points to speculative frenzy in obscure names while the broad indices are struggling. The volume on CLRO alone was nearly 89 million shares, and CWD saw over 338 million. These are not stocks you typically see with that kind of activity, and the volatility in that segment always raises questions about whether the moves are sustainable or just a flash in the pan. Now, a few of the bigger stories you need to be aware of. Berkshire Hathaway made headlines with an $8.5 billion bet spanning housing and AI. That is a massive allocation from the most famous value investor of the modern era, and diversifying into both housing and artificial intelligence says a lot about how even Buffett's office sees the future. Separately, there was a retrospective noting that the Vanguard S&P 500 ETF, which Warren Buffett famously endorsed back in 2014 as the best investment for most people, would have turned a $5,000 investment back then into over $20,465 to date. That compound growth from a 2014 investment to $5,000 to over $20,000 is a powerful long-term reminder of what index investing has meant over the last decade and a half, and it is hard to argue with the data when Warren Buffett himself pointed investors toward it. In the home improvement space, Home Depot and Lowe got compared side by side, and the contrast is interesting. Lowe was flagged as potentially 20% below fair value following recent earnings updates, and it is deploying AI-driven strategies to win more professional contractor customers. The focus on professional customers rather than the DIY crowd is a specific tactic that reflects how the home improvement sector is maturing. Home Depot, on the other hand, was viewed as fairly valued after a 21% run over the past 5 years, with analysts pointing to its military exchange expansion as a potential catalyst and questioning whether the stock looks cheap or fair in that context. On the logistics and shipping front, FedEx and UPS are facing a new competitive threat from an old rival. The dynamics of third-party delivery are shifting, and that pressure is something logistics analysts are tracking closely. Meanwhile, reports suggest Amazon is losing the battle for online groceries, a sector it has been trying to crack for years. The online grocery space was supposed to be Amazon territory, and these reports add complexity to the picture. In enterprise technology, Salesforce took a double blow over an AI product failure. And yet, some analysts are still positioning CRM as one of the best large-cap buys. That split between the product execution problems and the analyst bullishness is worth noting, because it shows how divided the market can be even on the same company. OpenAI lost yet another C-suite executive as the company heads toward its anticipated IPO. The executive turnover story at OpenAI just keeps growing, and it raises questions about leadership stability as the company approaches a public listing. A few other corporate developments worth noting. SpaceX officially joined the Nasdaq 100, adding meaningful weight to an index that is already heavily tech-concentrated. That move reshapes the index dynamics somewhat. There was commentary from Elon Musk about Mackenzie Scott, Jeff Bezos' ex-wife, who has donated over $26 billion, with Musk saying sadly yes when asked whether her giving is making the world worse, referencing Tesla among the tickers involved. In media, a major consolidation story was making waves. The Paramount-Warner Bros. Merger was discussed as potentially elevating HBO Max to a Netflix rival, adding another major player to an already crowded streaming landscape. The ticker NFLX came up repeatedly in these stories. And in healthcare retail, a 44-year-old mall retailer was quietly closing 28 stores, with CPRI, VRA, and Fossil in the mix. Let us go back to the AI theme because it keeps showing up everywhere. There were pieces on AppLovin versus Fastly looking at revenue trends for these two tech companies. AppLovin's ticker is APP, Fastly is FSLY. CrowdStrike just completed a stock split, raising the question of whether CRWD is a buy after the split. 5 top AI stocks on Robinhood included Microsoft, NVIDIA, and SpaceX among the picks, along with Hood. And there was even a piece arguing that Coca-Cola, of all names, is crushing the S&P 500 and the Nasdaq 100 in performance, with a case for buying KO in July despite the fact that a beverage company beating tech-heavy indexes is not something you see every month. Nancy Pelosi and Donald Trump both held some of the same 10 stocks. Apple, Oracle, Uber, Google, NVIDIA, Amazon, Palo Alto Networks, Broadcom, Vistra Energy and Intel. That is an unusual overlap, and worth watching not just for the investment implications but for what it says about bipartisan consensus on where to put money right now. CrowdStrike's stock split just completed, and analysts are debating whether it is a buy now that the split is behind it. The ticker CRWD was mentioned alongside NVIDIA in several articles, keeping the cybersecurity AI nexus alive in the conversation. Morgan Stanley recently dropped a timely Honeywell stock opinion, and there was a detailed analysis on picking the winners of the Honeywell breakup. That means investors would be well served to pay attention to which pieces of HON get separated and which trade names look like the clear beneficiaries. So to close out and take a step back, this is the takeaway I would leave you with. The headline narrative is unmistakable. AI remains the dominant force driving both capital allocation and market sentiment, but the technical signal environment leans cautiously bearish. A 34-16 bearish to bullish signal ratio across more than 10,000 checked symbols is a strong signal of risk-off that every chart-reading trader takes seriously. The broad market indices are mixed at best, with the tech-heavy Nasdaq taking the hardest hits and the Dow being the lone green index among the big three. Yet blue-chip tech names like NVIDIA, Apple, Amazon, and Microsoft continue to anchor the conversation with predictions of Apple potentially hitting a $5 trillion market cap by the end of 2026, a number that sounds ambitious but is being seriously discussed. With major earnings from NVIDIA, Micron, and Sandisk on deck, market participants are watching closely to see whether fundamentals can overcome the current risk-off technical picture. What happens in those reports could define the sector mood for the next several weeks. And the speculative names, the BCPC and CLRO of the world, have had their wild run, but that kind of extreme percentage movement in microcaps always raises eyebrows about sustainability and whether the momentum can hold for more than a day or two. That is everything for today market news. Thank you for listening. We will see you tomorrow.